Morning, Steve here in Chicago with the morning grain comps. Hope everybody had a good long holiday weekend. We're starting out a little bit easier, led by the corn and wheat. Beans about unchanged. Outside markets are relatively quiet, with the U.S. dollar slightly higher. Crude, gold, and U.S. stocks are going to open up slightly lower. As far as the grains are concerned, over the weekend I think conditions were a little bit drier than what some people had thought. Also, the next 2 to 3 days is going to be drier across the Midwest, with temperatures inching towards normal, which for the most part the market feels is a good and better forecast than what we had on Friday. We're still looking at weekend rains across much of the Midwest, and we've got a little bit of debate going on between whether or not this May wet, cool pattern is going to change and go to normal starting in June, or whether we're going to see still maybe above normal rainfall, but temperatures closer to normal. Irregardless, it means for the crops, this is probably good weather, except for areas that are really saturated. Today we get the first USDA's rating of the corn crop, expected to be 66, maybe 68% good to excellent versus 72 last year. There really isn't any correlation between this rating and the final yields. It's more like the mid-July rating that is key to the final corn yield. Some people think that we may have a yield a little bit less than what the USDA said in their May S&D, which could make the corn situation a little tighter, but it's still up in the air as far as what kind of summer weather we're going to have. In the beans, there's a lot of negative news that kind of piled up on Friday in the bean market, breaking it down below key support. I think the first thing was there was rumors that China might cancel some soybean cargoes from the U.S. Prices have dropped from there, and their crush margins have declined, and so they may not need the soybeans. Number two is that we're seeing a lot of uncertainty in Brazil as far as their currency, their situation there, and their farmers have become more aggressive sellers of beans to date. And number three, the U.S. farmer is expected to plant maybe a few more bean acres than they thought in the March intentions if they can't plant corn. So the soybean market's on the defensive here, and we'll see if any new China demand can offer some support. World wheat, we're trying to find some support in the wheat market in this trading range because of quality issues and maybe some long-term forecasts that could suggest that some dryness in Europe and Russia later on this summer. It is the time of year in which we tend to make seasonal bottoms in bearish markets in wheat, so we'll see if that finds any support in the marketplace. So the only other news that we saw was this week Brazil and China may sign an agreement of $20 billion that will help improve Brazil's infrastructure and some of the limitations that they have increasing crops and competition for U.S. exports, especially in beans, but now in corn, is some of their infrastructure issues. Funds last week was reported that they added 26,000 to their bean short. They added 24,000 to their meal short, and they reduced their corn short by about 27,000 contracts. But you still have corn and wheat in the trading range and beans breaking out on the downside. For farmers, this obviously is not good news. There's not a weather issue yet that's going to cause a bounce in prices. For end users, if prices are right, you probably should get some coverage, especially in the corn and wheat. But if you're still looking for a little bit lower prices, you might give it a week or two to see what the weather looks like in the month of June. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.